Congratulations to the PSEi as we ended this week as the worst performing market among the global indices. The index suffered its third straight week of losses as we hit a key support area along the 6,950 to 7,000 zone. We actually started the week with some good numbers. Inflation in October came in at 2.3%. And while this was up from 1.9% from September, this was largely expected by the markets. As usual, it was the food category that caused the uptick. Top contributors to inflation was rice, restaurants, rentals, and for some reason, eggplants contributed to it. Unemployment rate came down to 3.7%, again driven by the growing number of female workers entering the labor force. It was also a busy earnings week last week as most Philippine companies have started to release their earnings reports for Q3, plus came in at a 12% growth for their Q3 earnings to 3.57 billion. They are currently up 223% year on year. Core income for ICT also up 24%. They are already 75% of their full year targets. DNL, disappointing results. They are only 69% of their full year targets. Ali coming in with core income up 15% year on year, above expectations. CNPF core income up 14% year on year. They are already at 82% of their full year targets. Monde, core income up 31% year on year, but a slowdown in their Q3 earnings, only up 5%. RLC coming in at 13% year on year growth. They are in line with expectations, but a major slowdown in their Q3 earnings, negative 10%. Megaworld coming in at 14% year on year growth. Q3 earnings surged 25% to 5.18 billion. ASEN also good earnings. Globe coming in slightly ahead of consensus, 19% year-on-year growth, 21% in Q3 alone. DMC coming in at a negative 24% core income growth year-on-year, but this was largely expected. Pure Gold coming in behind consensus, contracting 11% for Q3. So overall, actually doing pretty well. Some companies missing expectations. So it was also quite disappointing when GDP numbers surprised to the downside, clocking in at 5.2%, which was well below the 5.7% consensus. This was much lower than the revised 6.4% in the second quarter and 5.8% in the first quarter. As they say, blame it on the rain, as the weather disruptions caused significant slowdown in agricultural production, tourism, and public construction. And while everyone thought it was a tight race between Kamala Harris and Donald Trump, the lopsided Republican win and the overwhelming Trump victory caused a major overreaction to the PSEi. Two major economic policies were the main drivers of the sell-off. First, Trump's protectionist policies caused a spike in the dollar index, and in turn, this further weakened the peso to 58.46 last week, which now begs the question, will the BSP pause rate cuts in December to defend the peso? And while they say that rate cuts will continue, the market seems to disagree as the Philippine 10-year yields broke out of this ascending triangle formation to tick up to 5.925%. Second, Trump's tax cuts and tariffs could rekindle inflation, and the markets started pricing in the possibility of a rate pause by the Fed this December. The latest CME probabilities puts this at 29%, up from 14.3% just a month earlier. And of course, this also led the US 10-year yields spiking up to 4.47% before hitting resistance, ending the week at 4.308%. This further widened the gap between the US and the 10-year yields, and of course, all hell broke loose as the PSEi reversed its Tuesday gains with the unexpected Trump victory, and this led to a sharp sell-off, pushing the index down 4% to close the week at 6,977. Now, despite the declines on Thursday and Friday, quick rebounds offer hope that the markets could hold above this critical level in the coming days. And this positions us for a potential recovery as investors reassess their reactions to the US election outcome. Now, Thursday's rebound was largely driven by ICT. ICT, with its stock price actually dipping to around 366 before Ricky Razon made a substantial show of confidence, purchasing shares worth 1.6 billion to push the stock back up into the 400 peso level. Now, investor concerns about ICT's future under potential US tariff policies likely influenced this dip. However, Friday's market action suggested a possible bottom as a broad-based recovery gained traction later in the trading day. So at this point, we are still within the uptrend support line, and as long as we maintain the index above the 61.8 fib, we should be able to sustain a bullish outlook. Now, in the meantime, focus on blue chip stocks as they are likely to lead the rebound this week. The stocks I'm watching for this week would be AC. Of course, it has managed to hold above the 50 EMA. This could be a good buy zone, but also look for the 663 support zone as a possible buy the dip level. Ali has pulled back 20% from its peak along 38.80. If it manages to hold this trend line support, this could be a good chance to buy. Now, BDO has also pulled back significantly from its double top formation. It is down 17% to its expected support zone, making it a possible appealing buy if it manages to continue to hold this level. SCC at 31.90, this is actually a strong support level. This is a good buy zone. If it dips to 31.05, I would buy more. So defensives this week looking very stable so far. Let's look at AP 37.50, managing to hold above the 50 EMA despite the market sell-off. Could be a good buy the dip opportunity here. 6% dividend yield at this level. Manila Water managed to close above the support line at 25.50, a good chance to buy at the lower end of this price range. Globe is down 15% from its peak but has held steady along the 200 EMA. A slew of negative news hit the stock hard, but this could be a level where I think buyers may be ready to come in. That's it so far for this week. And while this seems like a short list, actually there are many stocks that are at very attractive levels following last week's broad market sell-off, which really affected most sectors. Now, in terms of the sectors, the banking sectors, I think, may have limited upside given the macroeconomic environment moving forward. Now, except for BDO, maybe BPI, Metrobank is just a hold, no, at this point in time. Now, I'm still bullish on the property sector despite the pullback on the property stocks. But, I mean, the road to recovery will be very choppy. So, I mean, manage your expectations on the property sectors at this point. Don't go too aggressive buying the dip. And while you can add to your positions at this point in time, negative sentiments on the property sector can still push the stock prices down. Of course, utility sectors are a good defensive play. And for REITs, I've already talked extensively on REITs on past episodes, and we were aggressive on buying REITs during the attractive levels here at 32 and RCR even at 4.96. This has paid off for us so far. At this point, can you still add REITs? I mean, for REITs, it's really all about the yield, right? A REIT at this level is giving off a 5.64% yield. RCR's dividend yield right now is at 6.62. at 6% dividend yield is not so bad, right? So if you're okay with that yield, then go ahead and buy into these stocks. Now, my favorites for the consumer stocks, of course, are JFC, Monde. We also have Keeper, CNPF, and Pure Gold. And remember, I mean, guys, we've been waiting for the PSEi to dip to 7,000 for a very, very long time. And this is a good opportunity for us to deploy the cash that we were saving up after taking some profits during its peak last October. Now, for this week, look for the index to bounce off this zone. And of course, that's not a guarantee. If the market breaks down support, then we have to look at the next levels here at 6,800 to 6,700, where the market may potentially consolidate for some time as it breaks this upward trend we've been building up for quite some time. Now, let's look at some historical charts for the PH markets. This is the movement of the S&P 500 and the PSEi during the Trump win back in 2016. We have the S&P 500 and the Philippine markets diverging in the first few months, with the PSEi eventually rallying 1,700 points to reverse the downtrend and eventually end the period in the positive. While we always say past performance may not guarantee future results, remember that the BSP rate was flat during that time, and right now we are in the middle of the BSP easing cycle. So going forward, this should be possible for Philippine equities. Now, MSCI rebalancing data was also finalized last week. Early reports had investors speculating that Monde and Globe was to be added, but this did not materialize, which could have also caused the two stocks to pull back last week. Now, we will have some adjustments to the weights though, so take note of these as they may cause some volatilities on these names in the coming days. Now, going back to the US 10-year yields, look at the massive rejection on the trendline resistance here. This could mean a downside move back into the 3.5% zone in the following weeks. Now, this would definitely be good for PH equities, and this could help push us back into 7,500 by year end. The US elections did overshadow the Fed rate cut for November. Last week, the Federal Reserve cut rates by 25 basis points to 4.5%, but the discussion quickly shifted to the future of Jerome Powell as the Fed chair, to which he replied that he won't be going anywhere even if Trump tried. Powell was asked multiple times on Thursday about how an incoming Trump administration could impact the Fed's path moving forward. His answer: in the near term, the election will have no effect on our policy decisions. So let's look at the S&P 500 charts. Trump's presidential election win sent all major stock gauges soaring to fresh record highs last week. The Nasdaq, the Dow Jones, and even the Russell 2000 hit all-time highs as his plans for corporate tax cuts and deregulation fueled optimism for a boost to the economy that will eventually feed into stocks. So the S&P 500 traded along the 5,700 support zone before the late push on Tuesday as early results started to come in, providing early hints of a Trump win. But with the lopsided Republican victory on Wednesday, the market went ballistic, surging 2.5% on Wednesday to register another all-time high for the S&P 500, eventually ending the week at 6,002, but not before hitting the options wall here at 6,018. So with the markets grinding upwards, let's look at some historical charts. The market does tend to rally after a presidential election winner is declared, and with Trump's decisive victory, the market should have more upside before the usual consolidation, which will happen after the inauguration. Now, at this point, there's just no stopping the S&P 500 with one historical data after another continuing to indicate further upside for the S&P 500 well into 2025. And of course, the first week of November has so far tracked what typically should be the best 6 months of the year. So we'll see if we can sustain the momentum in the S&P 500. So for this week, we will have to monitor if the Philippine markets will be able to maintain the 7,000 support level. If it bounces off of that, then we will have a better chance of a recovery in the coming week. So that's it for this week. Please like this video if you found the information useful. Please subscribe to the channel for more updates. And again, good luck on your trades. Please manage your risk accordingly. And I'll see you again next week. Bye-bye.